Harrington here, gang. Happy Entrepreneurs Day. Didn't know that was a thing? Neither did I, but apparently it is. Now, as this is a podcast for small business owners and real estate investors, I don't see how we can not do an episode today. You're going to say, Jeff, man, you just did an episode on buying a business. Okay, first of all, had I known that Entrepreneurs Day is a thing, I would have saved that episode for this week. But secondly, not everybody buys a business. In fact, most people, I think, will start up their own thing. So let's talk about that. So here we go with part one. Now, this is going to be somewhat basic for a lot of you. You know, you've been doing this for a while. You started up a business already, so you know the gig. But I'm going to try and give you some insights that will be less obvious to you, so this is going to be interesting. And let's start with registration of the company, because as you know, that is where the process begins. All right. Now, you're thinking to yourself, okay, hey, that's easy. If I'm in Florida, I go to sunbiz.org, I follow the wizard, I do my thing, I pay my fee, and boom, I'm off and running. If I'm in California, well, for a very long time, they were using paper, but apparently they recently decided to join the 21st century, and now you can do that online as well. All right. Well, that's the easy part. I'm not even going to get into that, but let's talk about, have you thought about maybe not registering your company in Florida or California? What would be the reasons to do it in some other jurisdictions, say, for example, Delaware, which is where all the big companies seem to go, all the big corporations, right? Why do they do that? What are the considerations? See, didn't see that coming, did you? Let's talk about that just very briefly. Well, the analysis is totally different depending upon whether you're in California or in Florida. If it's in California, let's just dispose of that right away. It becomes a tax issue because that is a state that definitely has state income tax. So they have a revenue, what they call a board, for a franchise board, and they're super aggressive about collecting their taxes. So when people organize their company in a different state, although they live in California or even do business in California, they're usually trying to avoid taxation. And I'm not here to help you do that. It's very risky, very difficult to do. But that's the issue. I mean, that's why people would, well, it's not the only reason that people would organize outside of California, but traditionally that's what people are looking to do there. So I don't really want to focus on that. Let's get into Florida because there's some different reasons for maybe not organizing your company in Florida. So you Florida people, why might you consider setting up your company, by which I mean organizing or incorporating your company outside of Florida, even though you live and plan to do business in the state of Florida? What might prompt you to do that? Okay, well, have you noticed that sunbiz.org, which is just our colloquial way of saying the Florida State Department, specifically their corporations division, have you noticed just how very transparent that website is? So, for example, they will ask for quite a bit of information, including the names and addresses of the managers and the members, the owners, if we're talking about an LLC, and all that will become part of the public record. That's not necessarily ideal. For a lot of you, it won't matter at all. You won't care about that transparency. But, listen, if we're just talking about general good business practices, let's give this some thought. Okay, so now you might be thinking, well, look, I'm not doing anything wrong. Well, who cares about the transparency? Why not? All right, well, you might be right about that. But Florida is a very trolly state, meaning that there are people out there just looking for someone good to sue, and you are someone good to sue. So you kind of, for those, you kind of make yourself a target, potentially. If you have a business and they know that the business is doing well, they can find out exactly who you are, where you are. Just kind of makes it easy for them. And then, we're not necessarily talking about trolls. What about, jealous family members, jealous friends, scorned exes, things like that, So, if we're just talking about a smart business practice. There's no reason to have all your information so easily accessible in the public record. Well, you can do business in Florida and not have your information in the public record so easily accessible. And there are a couple of ways to do it, but we're only going to talk about one today, which is you organize your company in a different state, and then you register that out-of-state company to do business in the state of Florida. Remember, we're going to stay focused on Florida for now. So just very quickly, let's talk about some of the big ones. Delaware is the traditional one. Everybody goes to Delaware. The big corporations all go to Delaware. Why? Well, for one thing, Delaware is far more protective of the company's information. You almost can't see anything about a company when you go on to the Delaware Department of State Corporate Division website and you look up a company, you'll see a name and not much else. You're not going to see who the owners are. You're not going to see addresses. I mean, it's basically this exists or existed at one time, and that's about it. Now, here's the thing about Delaware. They got this whole thing started. They have very friendly corporate laws, meaning that they provide lots of protections to owners and executives and directors. And those are other good reasons for potentially organizing your company in Delaware. But Delaware, they think of themselves as the gold standard, and they kind of act like it, and they're very expensive. And I have to say that they're not necessarily doing the best job out there. These days, you have lots of alternatives, and here are some of the common ones. I mean, Alaska is a good, what they call asset protection jurisdiction. I haven't done much work there. My favorite these days is Wyoming. They have all the same advantages that you get in Delaware, and they're far less expensive, and they're just very efficient. They have like a nice system. It's very easy to use. You set up an account. I have, everybody that comes to me and sets up a company in Wyoming, I have them all under my account, my corporate account. It's just, it's just nicely put together. So there you go. That's part one. I forgot to announce it. But part one is, yes, register your company, but where to register your company? So you do have some options. Look, if you're like a sole proprietor, I don't know, it's a small business. You don't expect this actually going to get on anybody's radar, and you just don't care to incur the extra trouble or expense of organizing outside of Florida, then hey, go to Florida, go to sunbiz.org and just, follow the wizard and set up the company, and you're off and running. That's fine. It might be just perfectly fine for your circumstances. But if you do care about things like confidentiality, privacy, asset protection, good corporate laws that protect owners and executives, if that sort of thing does matter to you, my recommendation would be Wyoming, but there are a number of other states that are also good for that purpose. Okay, part two here. So now that you're going to register the company, what kind of company do you want to register? Obviously, an LLC is very common and very popular. So let's talk about the pros and cons of an LLC. But there is such thing as a corporation that still exists, an Inc. Why would you choose an LLC over a corporation or vice versa? And then there are other forms as well that you probably heard of that aren't that much used these days, to be quite honest. But there are things like partnerships. Well, there's your sole proprietorship, of course. Let's talk about those just very briefly. Okay, we've probably gone over this material a few times, so I don't want to spend a lot of time on it. But let's start with sole proprietor, because that's, that happens. Even now, it still happens. Although all of you know better than to do that, it still happens. So, let's just say you start a lemonade stand, or you start a landscaping company, or you're a handyman, and you just go out, you just go do it. You just go do the thing, and you get paid. You're a sole proprietor. Now, why do I say that's not a wise thing to do? Well, it's not a wise thing to do because you get zero liability protection with a sole proprietorship, meaning anyone who wants to sue will sue you directly, personally. That's definitely not ideal, especially when it's so easy to set up behind a corporate shield and not have any personal liability, meaning that people that want to sue have to sue your company, not you personally. But it does still happen, and that's what a sole proprietorship is. Let's touch very briefly on partnerships. Now, partnerships, technically, a general partnership has the same problem as a sole proprietorship, is that there's no liability protection. It's really just two sole proprietors who got together and, they're running the business. It's not technically a corporate form. They don't get any corporate shield. So it's very seldom done these days. Now, what we've created, and by we, I mean the states have created, is a form of partnership called a limited partnership that does, in fact, provide some liability protection. And those partnerships, those types of partnerships can be useful in some limited context. There might be some tax strategy, sophisticated tax strategy that we do not have time to get into here. But that might be one reason why you would go into like a limited partnership type of arrangement. But other than that, they're not much used. And I'll tell you why, because we're getting to the more popular ones. All right, let's talk about the two big ones, LLC or corporation. What are the pros and cons? When would you use one versus the other? Let's start with liability protection, because I think some people have this notion that a corporation somehow provides better liability protection than anything else. And that's actually not the case. An LLC stands for a limited liability company, and it pretty much has that very issue in mind. So why would I say that an LLC can sometimes provide even better protection than a corporation? Well, here we go. Corporations have shares. LLCs do not have shares. Sometimes we make up this fictitious, thing called membership units so that we can write up the documents and think about LLCs in the same way that we think about shares. But technically speaking, LLCs do not have shares. Now, why would that matter? Well, shares are personal property. So let's say that you are a shareholder in a corporation and you're being sued personally. Well, your shares are your personal property, meaning that a judgment creditor could liquidate those shares. They could take them. What about an LLC? Well, there are no shares, nothing for the creditors to take. The best they can do is get what is called a charging lien. And a charging lien basically says, well, if this company pays this individual any money, then we have a right to take that money that gets dispersed to the individual. All right, well, pretty easy to get around that one, as you could probably imagine. One, maybe you just don't disperse the money, right? Or you disperse it through other means, but you don't pay yourself directly. You're the one in control of the company, so you could probably make that happen. And then maybe you've heard of the concept of a multi-member LLC. Well, those provide additional asset protection for just that very reason. Let's say, you add your spouse as a member of the LLC. So maybe you have a judgment against you. You can't pay yourself because there's a charging lien. Why don't you just pay your wife or your child or your buddy or whatever? You see what I mean? But corporations do still happen. So why do people form corporations if LLCs are just so perfect? Well, they do have shares, and shares can be useful. So let's say that you're planning to raise capital by selling, a percentage of the company, selling interest in the company. Well, it's very simple and common, and everybody understands the concept of, a share purchase, selling shares to raise capital. So if that's the plan, if you know ahead of time that you're going to be trying to raise some capital by selling off shares, then it's not that you can't do it with an LLC. You can do the same thing. You just make them a member, but it's probably more convenient to do it with a corporation. And then you get to the issue of just, what people are used to and what they feel comfortable with. And selling shares is something that everybody understands. Whereas if you have to come up with a membership admission type of package with an LLC, and you talk about taking a percentage of the business, it's not that that's incomprehensible, it's going to weird anybody out, but somehow it's not as common, right? It's not as common practice as it is to just simply give somebody a share certificate. That they understand that, and why not? Why not just do it that way? And then, of course, if we're talking about corporations, if the plan is to maybe go public, or if you need to be able to buy and sell shares fluidly, if that's going to be part of your business model, well, then you have to go with a corporation. That's a no-brainer, because you can't easily do that with an LLC. It can be done. You can do all the same things with an LLC that you do with a corporation, but not so simply. You have to amend all the corporate documents. It's just not as easy to do. So if that's part of the plan, is buying and selling shares and trading, and there's going to be people coming in and out of the company on a fluid basis, yeah, absolutely go with a corporation. Just very quickly, and we're going to just touch on the tax aspect so quickly that I'm just going to try and get in and out of here as fast as I can. All right. Now, one of the bad things about a corporation is that you bring into the scenario the possibility of double taxation. If you think about it this way, you can see where the issue lies. And there are ways around this, but the issue is this. The company is going to bring in income, right? And that income is subject to taxation. And then if the company pays you a salary, Well, that salary is also subject to taxation. So that's why we talk about the concept of double taxation. You can get around that. You can make it an S corp. There are ways of dealing with that, but be aware that when you have a corporation, it brings up the specter of double taxation, and that's something for you to be aware of. Now that brings me to part 3, and I'm going to try and do this briefly, so I hope it doesn't make your head spin, but let me talk to you about tax designations, because people find this very confusing. And it's not your fault. It is very confusing. I don't know why we've chosen to label things the way we have, but what am I talking about? All right, so you may have heard of something called an S corp or a C corp. What does that mean? Is that the form of the company? I mean, it's got the word corp right in it, so I guess we're talking about a corporation, right? Wrong, and that's why I hate the way they label these things. We need to come up with something different. Why do they do that? It confuses everybody. So let me focus on LLC here, because I think that drives home the point more clearly. Your LLC can be an S corp. You're like, aren't those two different things? An LLC and a corp? Yes, but remember, S corp doesn't mean that it's a corporation. It's a tax designation. What specifically does an S corp indicate? It indicates that it's going to be pass-through income, meaning that whatever income is generated by the company is going to pass right through that company, which is a separate entity, but it's going to pass right through it and attach to you personally. So you're going to report that income on your 1040, your personal 1040. There's a little schedule that has to be attached, but let's not bother with that. The point is that there's no double taxation. The company doesn't pay its own taxes. The taxes get paid by you personally on your personal return. Let's stick with an LLC so I can drive this point home. Your LLC can technically, and this rarely happens, but it can be registered as a C corp, meaning that the tax designation you elect for your LLC is C corp. Now, what does that mean? I just told you what an S corp is. What does a C corp mean? If your company is a C corp, that means the company itself is going to be paying taxes. So the income that comes into the company is going to have to be reported by the company and tax paid on that by the company. Now, remember the double taxation concept. So if the company then pays a salary to you as the officer, as the president of the company, or anybody else, you also have to turn around and pay taxes on that salary. So that brings in the double taxation that we talked about. But that's what a C corp is. So you might be asking, why would anybody ever do that? Well, not very often will you select to do that, especially if you're a small business owner, which is, what you're my client, so that's probably what you are. Not very often would you do that, but there are some occasions where you would. Just very briefly, when you have a certain number of employees, it can become more beneficial to be registered as a C corp. If you're really trying to keep the income of that entity separate from your personal estate, again, for tax reasons, there comes a point at which it might be advantageous to be a C corp. That's as far as we go. As you can imagine, that stuff gets hairy. So that's it, guys. That's why you care about launching a new business. I hope that wasn't boring. I told you I was going to try and give you some nuances that weren't going to be obvious to you. Happy Entrepreneurs Day once again. Recuerda que aquí todos hablamos español. Y estamos aquí para ti. And, as far as comments and likes and that sort of thing, that stuff down there, I know you'll do the honorable thing. Catch you guys next time.